Welcome back to another episode of Multifamily AP 360. Today's guest built one of the world's most powerful investor ecosystems, 22,000 vetted profiles, 1,500 active investors, and 17 million followers. From billionaire interviews to AI-driven capital strategies, Richard C. Wilson is here to break down how wealth is shifting, how AI is disrupting, and how founders can finally stop guessing and start raising smart. So welcome, Richard. Do you want to add anything to background?
Yeah, we're just doing a lot with artificial intelligence these days, like a lot of companies. We've developed 57 little artificial intelligence tools that work right out of the box. And then we've learned a lot by interviewing a lot of family offices and billionaires. And we just like to share those insights on podcasts like this.
Yeah, sure, absolutely. We'll touch on that. So, Richard, before we get into billionaires, billion-dollar deals, and mental models, can you take us back to your early days? What was your journey like growing up as a third-generation Eagle Scout, and how did that shape your foundation?
Sure. Yeah, I think one important thing is I was always starting a business when I was a kid. So I had started like 10 businesses before I got out of high school. So I learned how to cold call and pitch people. And I learned what it's like to have a business where nobody wants what you're selling or where lots of people want what you're selling. I learned how to price things and position them and brand them. I think that was really important. I also read Inc. magazine as a kid and thought about what I would need to do to be in Inc. magazine one day from growing a business to a large scale made a big difference. And then in college, I had my first really successful business that made a good amount of money. And I was able to cold call my way into a very high paying risk consulting job. That paid for my MBA. And then I thought at age 21, who's going to pay me as much as I'm making right now to do something interesting that's not so boring like risk consulting? And that's how I got into the capital raising world and working with investors.
Awesome. Thank you very much. That's inspiration for a lot of kids. So your husband of 15 years and father to three girls. How have those roles grounded or influenced your approach to business and leadership?
Yeah, I think that I've just been around a lot of wealthy families. The founder is unhealthy, not very happy, highly stressed out. And then I've been around some ultra wealthy families where they seem to have a very holistic definition of success and they're focused on many different parts of their life being successful, not just the money side of things. And so seeing that from a distance, it's obvious that if you have lots of money, but then to get there, you got divorced 5 times, your kids don't talk to you, and you need to lose 40 pounds, then you're not really successful. You just obsessed over one part of your life at the cost of everything else. True success is living where you want to live, enjoying your life, being happy, investing in relationships, fun adventures, and also doing well in business while taking care of your employees, et cetera. So everyone has bumps along the way and challenges and hard times, but looking at success in that more rounded way, it's obvious that is the smart way to do it after seeing people become very quote unquote successful in business, but then they failed in many other parts of their life.
Yeah, thank you. So you now lead a global investor club with over like 1,000 deca millionaires and billionaires. What was the first big break that led to building the family office club?
The first big break was really my blog took off. We started talking about hedge funds and private equity and real estate and capital raising and family offices. And whenever I wrote a blog post on family offices, that was more popular than everything else. So we started focusing just on that. And we started getting thousands of hits a day. When I was 26 years old, I got on the front page of the Boston Globe because the website took off. A couple other breaks were when I got a book deal with Wiley early on, and I bought familyoffices.com. I think those were turning points of positioning ourselves in the industry and starting the foundation of what we have today.
Sure, thank you. So let's shift towards billionaire mindset. And you have interviewed and observed many of the world's wealthiest individuals. What are some key mental models that billionaires use consistently, but that most people either miss or misunderstand?
Yeah, I think that billionaires understand that while it's good to seek the opinion of others, at the end of the day, you've thought about your platform or your niche, or you know what works better than anyone else for your industry. And so while safety in doing what others think is a smart idea is still something to keep in mind, They oftentimes will go against what their team says or what everyone around them says is realistic or possible. They're very confident in their own abilities. They're very confident in their ability to shape the world and make it malleable to the way they want to have results go. And they're open to trying new things that other people think have no chance of succeeding and then making it happen. And so I think that part of it is expecting excellence from others. Part of it is having an optimistic mindset. And a lot of it is about collecting little mental models along the way that you know work. And when you learn enough lessons to grow to be worth $10 million or much, much more, then you're already thinking wildly differently than most people. And so you realize that and you just see the world in a different way. Like you're obviously very different in how you think, and your thoughts that are unique lead to your unique results. And so there's almost a disdain for thinking like other people because you know that really doesn't work.
So, how do billionaires handle risk or better at de-risk opportunity in ways that average investors don't?
One advantage is that if you are very successful, you might get an opportunity to add value to a deal, and someone might show you a deal first because you could add value to it, right? So if you've built and value add improved 20 multifamily properties, then a mom and pop person who doesn't know how to manage the construction might say, you know what, I'd rather just sell half of it to you and then you do the value add part because of your strategic expertise and your ability to manage that. You might get to see deals at a better valuation. You might see deals first or exclusively because you're really good at whatever your niche is. It could be dry cleaners or auto dealerships, whatever. And so when you get to that point, then you start building your wealth faster because you have a reputation for being excellent at one type of value add activity. And then you're able to get more and more of those types of opportunities, and the wheel just spins faster and faster. So it's about getting that momentum, adding value, and then being hyper specialized, hopefully in just one or two asset classes or strategies. And then things can really take off from there.
Yeah, great. So, what's something surprisingly human or vulnerable you have witnessed in your billionaires interviews? Something that reminded you that wealth doesn't immunize from real life.
Yeah, I think that one thing that's emphasized over and over again within the books is the hunger to continually learn everything that's on their niche. Basically, a lot of people don't have a deep work ethic. Many times it's because they're not very clear on their vision. And one of my mentors, Eben Pagan, used to always say that a clarity multiplies action. And Arnold Schwarzenegger says that having a crystal clear vision and then really enjoying the process made it so he would work twice as hard as everybody else, but he also enjoyed the whole process. The founders of the Home Depot set out to open 1,000 stores. Nobody believed them, but that was their goal from the beginning, and they got it done. But it was really having that crystal clear vision of where they were going and then driving towards that was really critical. And a lot of people don't want to put the work in because they don't have a crystal clear vision, and they also don't enjoy the process. And all those things have to be connected.
Yeah, that's so powerful. Thank you. So, let's shift towards investor psychology and patterns. With access to over 1,500 investors and 22,000 weighted profiles. So, what patterns have you uncovered about how ultra wealthy individuals actually think and make decisions behind what they say in public?
Yeah, I think that what's been coming up a lot lately because some real estate deals have stopped distributions, some deals didn't work out because of floating interest rates, or it's just harder to buy deals right now due to high debt costs. A lot of investors are saying we're really investing in the character of the person, we're really investing in their values. They would much rather invest with somebody that they are high conviction on and they really trust and they understand exactly how they add value versus somebody who promises more. I think a lot of investors are realizing numbers on a piece of paper don't mean anything. Everyone promises that their deal is going to be the amazing deal, and it doesn't really mean anything. The only thing that means anything is your trust in their expertise, their integrity, their character. If they're allocating more than $250,000 or $100,000, they want to meet in person. They often want to walk the property. That's important. And so investors are more likely to invest with people who they've met in person, walked the property, or they're very familiar with the industry so that when they look, they can dial in right on the core details and see exactly what you're doing and that it really makes sense.
Cool. Yeah, just follow up on that one, like from due diligence point of view. In your world of what signals help you quickly identify truly trustworthy investors, capital raisers within your 22 members network?
Yeah, in terms of what are they focused on right now?
Yeah, how exactly you need to identify real investors? Yeah.
Sure. One of the best ways to identify them, there's many different ways. There's top communities in your local city, business owner associations and clubs. There are places that are full of family offices in terms of where they live. If you can identify those communities and be a small part in those communities, or have the one mentor once told me he got the cheapest house in the most expensive family office neighborhood. So all of his friends were family offices and very successful people. And then now he owns one of the biggest houses in that neighborhood because they all became his clients over time and he got to think like them. So that's one strategy. You can go to live events like family office club events or others, of course. You can also use artificial intelligence tools. We have family office databases and essentially AI tools that will look at your pitch deck, where you're based, where your projects are, and then suggest investors that are right in your backyard, right near you, so you can go meet with them in person. And instead of looking through the Excel files, it just says, here's the top 50 investors out of the 22,000 that you should probably approach first. And that way you can focus greatly on those that are most likely to close. So those would be some strategies that I would use. If you can't go to other people's events, maybe host a breakfast or do your own networking events and create your own networking platform. That's essentially what we did to meet investors, and that's what Family Office Club is.
Sure, thank you. So you have shared over 100 strategies for capitalizing. So what common mistakes do fund managers and entrepreneurs make when seeking capital from family offices, and how can they avoid them?
One of the mistakes is just thinking that high returns and promising a lot is going to get them to come in the door. It does not. The other thing is that a lot of people try to rush the family office and they are under a tight deadline. So they have to try to move quick. But then the family office gets scared because they're like, okay, I don't even have time to vet the deal. If you need the money by next Friday, so by the time I even read this and ask you a few questions, it's going to be next Friday. So going to them too late and not planting seeds early is a mistake. Not focusing on adding value first and building a relationship is a mistake. And then a lot of people raising capital don't have a one-liner that's compelling. They don't have a one-page version of their pitch deck. They don't have a 1-minute video from their founder. They don't have a one key visual that really shares how their value add process works. They're missing all of that. And so the busier somebody is, the less time they have to look at your stuff. And so if somebody is a really valuable investor and you're trying to go to higher level investors, you have to be more concise, and your pitch deck should be 12 to 19 pages long, not 40 pages long or 33 pages long. And so being super concise is important, and almost everybody messes that up and they don't have those things that I was just mentioning.
Cool, yeah. So what kind of deals are catching the most attention inside the family office club right now? Are there any emerging trends you're seeing?
Yeah, one trend is that a lot of family offices are using artificial intelligence instead of hiring more people to their organization. They're just putting more money into AI. I'm seeing that across many industries. The other trend is that because tech is taking off, there is a lot of reorganization of the whole tech industry, and a lot of the big tech platforms are going to get disrupted. And I think who will get disrupted the most are not the top 5 or 7 tech companies because they own the LLM models and they're smart enough and capitalized enough to position themselves and attach themselves to these LLMs. But I think it's the big companies like Zoom, DocuSign, Calendly, a lot of these companies that are worth billions of dollars, but somebody in a weekend can program the software to do at least the one function they're famous for. It might not have all the bells and whistles, but at the end of the day, people need DocuSign to sign PDFs. And someone created one of those in a weekend for free, and they've given it away to 30,000 people now, and it's growing. I think companies like that are going to get disrupted. And so I find that investors are allocating a little bit more towards tech than they were before, even if they always saw tech as something that maybe they should have a little venture capital allocation to. How does that relate to real estate groups out there? Maybe think about how to build your tech stack as a real estate firm. Think about whether there's a real estate tech type piece of software that you can tap into or use, or some use of AI to boost the NOI on your current properties, or a way to provide some sort of AI tool to investors who just would genuinely appreciate it. And then you can generate maybe a deeper relationship with that investor, and it can be your foot in the door. Because at the end of the day, a lot of people raising capital complain that just people aren't replying to their emails very much these days. And one reason is that there's more emails going out. There's a good amount less capital going out. So you have to be that much more dialed in to get their attention. But really, your email has to compete not just with what's in their inbox, but everything else going on in their life. And you need to make it in their best interest to reply to your email, meaning that what you offer is more valuable than what anyone else is offering that day in their inbox. And that's the level you have to operate at. And most people don't think that way. They just think, oh, what are we pitching? Let me write out my long pitch. And then nobody ends up reading it or replying. So I think you have to reverse it and not be like, hey, let's have our first interaction as strangers be you giving your time to look at my pitch. Instead, it should be like, here is a free tool. Here's a infographic. Here are the 10 questions you should ask on due diligence when vetting any private equity real estate group or whatever, so that they lean forward and they engage with you.
Yeah, that's awesome point. Thank you. Let's
Mhm.
shift towards AI and capitalizing. You have developed 30 or 50, like I guess 50 plus AI tools under investor super intelligence. How do you see AI fundamentally changing the art of capitalizing and investor targeting in the next 3 years?
Sure. Yeah. I think that it's already massively changed it. We find that most people use, like 70% of business people are using GPT or Grok or Copilot or some sort of AI tool. Most of them do not have a dialed in tool set for their niche. And so we've developed these 57 kind of GPT bolt on tools that are, we call it investor super intelligence. And basically, it can take a 50-page pitch deck and then write out 7 one-liners that are dialed in based on 25 criteria and do that instantly. We also have transcribed over 1,000 investors speaking on stage at our events. And you can sit down and while you're on a walk, you can be chatting with it in audio format, ask it questions, and you get feedback from the collective intelligence of 1,000 investors that have been on stage. The big thing is that we have proprietary data from our events. And so if you ask GPT for advice, you can get advice, but some of it's from Wikipedia, some of it's from random blogs, some of it's from a $1 million net worth person in New Zealand, some of it's from fake content that's really not advice from any human being. And when you have tools that are trained on just information from decamillionaires and family offices, and like one of our tools has 1,000 public talks from billionaires that it's been trained on, then you're getting advice from billionaires and decamillionaires, not from Wikipedia and random blogs and all over the internet. So I think that's really important to note. And it just allows you to get everything improved faster and be more decisive for people that are analytical. They want to make sure that they're thorough and they do things the right way. They can evolve something very quickly using AI and just get more done with less people. I think that this can be a massive disruption to our economy as the price of software and some things come down. But also, I think that 33% of all white collar jobs are going to be gone in 2 years, and nobody really is hiring unless you're a top AI talent. So I think that's a massive challenge for lots of people out there.
Yeah, thank you. Great point. So, after hosting like over 300 investor events, what are some recurring themes or insights you have gathered about the needs of interests of ultra wealthy investors?
Sure. I think that some of the trends I see is that as the space becomes more crowded and there's 10,000 plus real estate firms out there, if you're just starting now or you don't have enough momentum, you need to be hyper clear about what you do. A lot of people have a brand name like Wilson Capital or ABC Capital, and nobody knows what you do. Like, why would you want to make it mysterious? If you're monster.com and you offer people jobs, okay, you could spend $1 million a week and get it in people's minds that you are monster.com and you have job ads, right? But if you're not going to do that, you need it to be instantly clear what you do. And if you go to an event with 1,000 people and you meet somebody and you email them the next week, and there's no picture on your email signature and your brand name means nothing, then good luck having them remember anything that you told them at the event, unless you're one of the top 3 people that they met and you made an amazing impression. So it's more effective instead of saying Wilson Capital to say we are Alabama multifamily capital or whatever the niche is, right? And if you don't have a clear focus, that's another thing. Someone might say, oh, we invest in 5 different states. So we've only done 4 deals. So maybe pick the state that you live in or that not everybody else is doing or where you have a real clear edge and just decide to laser focus there going forward. Could you still, once every 10 deals, do a deal somewhere else? Yes, you still could. But you should be known for we are the Austin, Texas self storage capital partners group, or whatever. And being hyper clear allows people to send you deals they might have sent to somebody else. You might see deals earlier, faster, see more deals, better quality deals. And then by hyper focusing, you're not only communicating clearly to investors that you're different, but it's more believable that a four-person team could be masters of the universe when it comes to self storage in Austin, Texas, because everyone else doing self storage in Austin, Texas is distracted by doing it in 10 other cities as well. It's not very believable that a four-person team is going to get the best of the best deals in self storage nationally. They might have one fall in their lap, but it's like you're going to be flying all around managing different construction crews and different property managers and different. It's not very efficient. It's not very credible. It's more credible to be laser focused if you don't have momentum.
Sure, yeah, that's so powerful, like hyper focusing on specific things. Thank you. And would you share any best experiences so far from personal side or business side?
Yeah, I think that like one of the best experiences for me has been just seeing our investor club as a perpetual learning machine. So the more events that we host, the more that we are very careful on who we invite to speak on stage and really just invite people that I want to learn from. And then I get smarter by going to our events and I make sure it's not boring. So we keep it really fast moving. A lot of people speak for just 5 minutes. Our longest talks are 15 minutes long. We might have a billionaire do a fireside chat for 20 minutes, but there are no hour-long talks from random fund managers. There's no 40-minute talks, 30-minute talks, et cetera. So that keeps things moving very quickly and it keeps us constantly learning. And I think that if you're always learning from the right people, then you're refining those mental models. And that's been the most fun experience is to be able to run the community in a way that's selfishly good for me. It keeps things interesting, but then that also keeps it interesting for them as well.
Awesome, thank you. Would you also share any challenging experience?
Yeah, I think what's been challenging is just when investors are allocating less capital, then capital raisers have less money to spend on coming to an investor club. But after doing this for 18 years and running these 300 events, and I've closed and structured around $500 million of transactions, much more than that at this point, the strategies you need to raise capital are twice as important now. Before, you could raise capital much easier. So you didn't need to have everything dialed in. Now you could have everything dialed in and maybe still not raise the capital. So you better get it dialed in and do what investors have been saying they want you to do the last 2 decades, but most people just ignore it and they don't do it. They write long emails. They have a brand name that means nothing. They have no one-liner, no 1 minute video, no visual of their value add, and they just do it in a little bit of a sloppy, non-dialed in way, honestly. So the ironically, people need what we know even more than ever. But challenge is that they're not raising as much capital. So they're like, oh, I don't know if I want to spend money on an investor club. So that's a little bit of a challenge. But these things ebb and flow and go up and down over time. So I'm sure things will come back strong in a little bit.
Yeah, sure, thank you. So let's shift towards personal side. Any personal habits that are helping you be successful?
Yeah, I think health, we do CrossFit 3 or 4 days a week. So after this, I'm going to a CrossFit class downtown with my wife, going on fun adventures with friends and clients. Like we went to Machu Picchu and Everest Base Camp and fun places like that. And it helps build relationships and just helps you think, just getting off the grid a bit, not always be working on emails and projects and deals is really helpful. And then I'm super clear on my monthly, quarterly, annual goals. And I update those on the first of each month. And then every morning I start out reading about 30 one-liner kind of mental peak management mindset statements. And so by being on top of that, I know where I'm going, how I'm going to get there, how I need to think about things, and that really helps.
Yeah, great. Share any one personal learning that has played a part in creating massive impact and powerful shifts in your own life.
If you position yourself wrong, no one wants to work with you. If you position yourself, then you attract capital and you attract opportunities instead of chasing them. So I think that's been the most powerful thing. And then also personally, just really being conscious about where you're living and why. You should be near the assets you're investing in, or you should be in the place where you can live your best life. Because if you're happier, you're probably going to be more willing to work in the business and work harder because you're just a happier person versus being frustrated being based somewhere you don't want to be.
Cool. Thank you. So, any books that impacted you, Richard?
Yeah, a book called Mastering the Rockefeller Habits has been great. There's another one called Success Principles by Jack Canfield. And then if you go to billionaires.com/books, you'll see my top 10 favorite books authored by billionaires as well.
Awesome. Thank you very much. And how can listeners connect with you, Richard?
Best place is just go to familyoffices.com and you can see our website and our events coming up and our membership. You can also see our artificial intelligence tools. Maybe you're not ready yet for a full investor club membership, but you could tap into the investor superintelligence AI tool set. So that's the best place, or they can just shoot me an email. It's just richard@familyoffices.com.
Awesome. And thank you very much, Richard. I really enjoyed the conversation. Thanks for adding value to the show.
Sure. Thank you for having me here.
Yeah.
Appreciate it.